We're here because free speech is under attack. We're here because people are being convinced that socialism works. We're here because people are being judged guilty until proven innocent. We are fighting back with facts. This is not a safe zone, so buckle up, Buttercup. This is the raw, naked truth.
Welcome to the Raw Naked Truth. I'm your host, Eric Lopkin, and with me today is Brian Williams from Northshire Consulting for our Wallet Watch segment. And Brian, what's going on with the markets now?
Well, happy to be back, Eric. Good to see you again. What was interesting is, as we record this on a Monday, is Friday. We almost touched a bear market. So the stock market, I say, is a little bit like baseball in that we always like round numbers, 500 home runs, 3,000 hits, that kind of stuff. So a bear market is considered being down 20% from your peak. So we were down to that mark on the S&P 500 intraday on Friday, and then a little late day rally saved us. So we could end up hitting a bear market this week, although we almost hit it last on Friday. So that was kind of interesting. One of the other interesting things last week was earnings from Walmart and Target. And typically you don't think of those organizations as being very, very volatile stocks, but Walmart was down 10% in one day. And then the following day, Target was down 25%. So big moves there. And one of the things we talk about is inflation and consumer spending. And what's happening is a lot of the consumer spending numbers are based on the dollar amount that people are spending. So when you look at these numbers and you say, geez, people went to the store and spent $100 last year, and now they're still going to the store and they're still spending $100. So consumer spending is still strong. But what they don't factor in is that you're buying a lot less with that $100 purchase. So you have what's happening is you have a big divergence between discretionary and staples. So staples are those things that you have to have, and discretionary, of course, are those things you want to have. So in the performance of the stock market this year, so far, staples have been down about 8%, whereas discretionary has been down about 31%. So that's year-to-date numbers, and a lot of the focus has been on information technology so far, but that's down 24%. The biggest move sector-wise has been on the discretionary side. So when you look at the difference between Walmart and Target, we sort of lump those in the same category, but Walmart is actually considered a consumer staples, a part of that index, and Target is considered consumer discretionary. So the idea is people are going to Walmart for things that they need, and people are going to Target maybe more for things that they want. So big difference in those two stores as far as the stock performance and also the way they're viewed by the market.
Right. Both of those stores got into consumer staples a number of years ago when they added groceries. But Walmart went whole hog and actually pretty much put supermarkets in their stores, while Target seemed to stay closer to the discretionary income. Their grocery sections are much smaller than Walmart's, less selection. So people are really spending that money on things they need rather than just, anything. What does that really mean, though, for the economy as a whole? I mean, isn't that going to be a drag on the economy as people are just focused on the staples?
Yeah, it's definitely an early warning sign that people are pulling back their spending from things that they want. So there's been a little bit of a story in the market that people may be buying less physical items and that they're still spending on discretionary, but the discretionary is in travel or experiences. But I think as we start to get potentially closer to recession, that may not be the case. So I think watching these two stocks and watching these two sectors, the discretionary versus the staples, will tell us a lot about the economy.
Yes, and you mentioned people are spending on travel, but that's about to be curtailed a bit by the cost of gas. And if you haven't noticed, the cost of airline tickets has spiked, partially because of demand, but very much because of the cost of fuel.
Right. And do they have enough employees to help people get on and off the plane and fly the plane. That's still an issue too. So, so you have a little bit less availability with more people, maybe not going back to where they were pre-pandemic, but obviously traveling more than they did during the pandemic. And there just isn't enough workforce to handle all that.
Right. And that's another factor in the inflation as well, is do businesses have enough employees? There's been a lot of talk about raising minimum wage again and trying to get people back to work that way. But when you raise salaries and you raise fuel costs and inflation in general for supplies, all of that impacts the bottom line of a business. Target, in their earnings call, stated that they'd been trying not to raise prices on the consumer, but now they're going to have to. So that's going to push prices even higher.
Yeah, right. You get into that vicious cycle where you have to pay your employees more. So the cost of your product goes up. So then other businesses need to pay their employees more so they can, so it's round and round we go, but that's how inflation starts to spiral.
Exactly. All right, Brian, thanks for being here for this edition of Wallet Watch.
Thanks, Eric.
That's the Raw Naked Truth. You can catch every episode of the Raw Naked Truth at xvadio.com/podcasts, the Apple Podcasts app, Google Podcasts, Spotify, iHeartRadio, Stitcher, Audible, Amazon Music, and wherever you find podcasts. We'll see you next time.